Have you ever wondered why some of the world's largest corporations are quietly jumping into cryptocurrency, while most investors are still sitting on the sidelines? What are they seeing that you're not? Why are these massive financial institutions rushing to embrace crypto-backed ETFs? And what does that mean for the future of your portfolio? In today's video, we'll reveal the untold story behind institutional adoption and how these giants are shaping the future of crypto investments. But here's the kicker. What if you're missing out on one of the biggest financial shifts of the decade? Stick around, because what you're about to learn could change the way you think about crypto forever. And trust me, you don't want to be the last one to catch on. Before we dive in, I want to give you something valuable, absolutely free. If you're serious about staying ahead of the curve on crypto, I've got a special resource for you that'll help you understand the next big move in crypto ETFs. All you need to do is hit that subscribe button, and I'll send you a link to download it right after this video. By subscribing, you're not just getting the latest insights into cryptocurrency, you're investing in your future. And if you're ready to take your crypto knowledge to the next level, this is the place to be. Let's jump in. Now let's get to the juicy part. What exactly are these corporations seeing that makes them rush to create crypto-backed ETFs? Well, the world of finance is shifting, and it's happening faster than most people realize. These institutions have access to resources and data that the average investor simply doesn't. And yet, many of us are still sitting on the sidelines, wondering if crypto is just a passing trend. But let me tell you this, institutions didn't get where they are by betting on fads. They're seeing something much bigger. They're betting on a future where cryptocurrencies, particularly Bitcoin and Ethereum, play a central role in the global financial system. And they're doing it through ETFs. But before we get too deep, let's break down what an ETF is and why it's the key to unlocking the full potential of crypto investments. Crypto ETFs are exchange-traded funds that allow traditional investors to get exposure to cryptocurrencies without actually owning the coins. Think of it as a way to invest in crypto assets without the hassle of managing wallets, dealing with exchanges, or worrying about the volatility of individual coins. It's like buying stocks, but instead of owning a share of a company, you're owning a slice of a diversified crypto portfolio. For years, the idea of crypto ETFs was nothing but a pipe dream. The SEC, Securities and Exchange Commission, was extremely reluctant to approve them, citing concerns about market manipulation, lack of regulation, and security issues. But over the past few years, something changed. Institutions started pushing for ETFs, and now, with the approval of Bitcoin ETFs, the floodgates are opening. Here's where it gets interesting. Large financial institutions have been heavily investing in crypto-backed ETFs for a few key reasons. First, they're using crypto as a hedge against inflation. In the face of endless money printing by central banks, institutional investors are looking for ways to protect their wealth. Bitcoin, often referred to as digital gold, is seen as a store of value that could withstand inflationary pressures better than traditional assets like stocks or bonds. Second, there's the issue of diversification. When you look at portfolios of large institutions, diversification is key. Crypto offers an asset class that's still in its early stages, meaning there's plenty of room for growth. It's also uncorrelated with traditional markets, so it can act as a buffer during times of economic uncertainty or stock market downturns. In other words, adding crypto to a portfolio can help spread risk. But it's not just about risk management. Institutions are also driven by potential profit. They see the incredible growth of crypto assets and want a piece of that action. So, why now? Why are institutions diving into crypto-backed ETFs in 2025 when the market has seen some major fluctuations over the past few years? It all comes down to timing. First, consider the massive adoption of cryptocurrencies by retail investors. In recent years, millions of people have entered the crypto market, driving up the price and the demand for crypto-related products. Institutions are watching this closely, and they know that if they don't get involved now, they risk missing out on a massive shift in the financial world. Second, with the global regulatory environment around crypto beginning to mature, there's less uncertainty in the market. Governments and regulators are starting to create frameworks for crypto, making it easier and safer for institutions to invest in it. For example, countries like the United States, Canada, and Germany have already approved Bitcoin ETFs, which has opened the door for larger institutions to jump in. Now, you might be wondering, what does this all mean for the average investor? Here's where it gets really exciting. The institutional adoption of crypto ETFs is going to have a profound impact on the entire market. Think about it. When massive institutions like BlackRock, Fidelity, and Grayscale are backing crypto, it's a signal to the rest of the financial world that crypto is no longer just a speculative asset. It's becoming a legitimate investment class, and that, in turn, is going to attract more retail investors and ultimately drive up the value of crypto assets. But there's also a more personal angle here. If you're an individual investor, this could be your opportunity to finally get involved in the crypto space without all the complexity and risk. Crypto-backed ETFs give you a way to tap into the potential of digital assets without having to manage wallets, private keys, or worry about the security of exchanges. It's a more traditional, regulated way to invest in a still emerging asset class. That said, it's important to note that no investment is without risk. Crypto is still volatile, sometimes extremely volatile. The fact that institutions are jumping in doesn't mean the market is risk-free. In fact, it may make the market more volatile in the short term, as institutional buying can lead to large price swings. Furthermore, while ETFs offer a more regulated way to invest in crypto, they also come with their own set of risks. Regulatory changes, liquidity concerns, and the continued volatility of crypto markets could all impact the performance of these ETFs. But here's the thing. Institutions have the resources to navigate these risks. They've been operating in volatile markets for decades, and if they're all in on crypto, it's a strong indication that we might be in the early stages of a much larger trend. Here's the bottom line. The rise of institutional adoption of crypto ETFs is one of the most important developments in the financial world today. What we're seeing is a seismic shift in how the world's largest investors view digital assets. They're no longer just a tech play. They're seen as a legitimate part of a diversified portfolio. For you, this presents an incredible opportunity. As these institutions drive demand, crypto prices could rise. And as the regulatory environment stabilizes, we could see even more mainstream adoption. But you need to stay ahead of the curve. By understanding how crypto ETFs work and how institutions are driving the market, you can position yourself to benefit from this next wave of growth. If you're ready to dive deeper into how crypto ETFs can fit into your investment strategy, make sure to hit that like button, subscribe for more insights, and let me know in the comments what you think about institutional involvement in crypto. Are you ready to join the revolution, or are you still on the fence? To sum it all up, the institutional adoption of crypto ETFs is the game changer we've all been waiting for. The institutions are leading the way, and if you want to stay ahead, now is the time to start paying attention. Crypto is not just for the tech-savvy anymore. It's becoming a mainstream financial product, and it's going to change everything. Don't get left behind.